Welcome to the Friday Five with Steve Greenfield on CBT News.
Welcome to this week's Friday Five, where we recap the last week's automotive technology deals. I'm Steve Greenfield from Automotive Ventures, and thanks for joining us. We've had a lot of news over the past week, so let's get started. Despite, or maybe because of the COVID pandemic, dealers are more profitable than ever. We've entered Q3 earnings call season, and the public dealer groups are announcing incredible profitability. Who would have guessed, given all of the uncertainty this year brought to the automotive market? AutoNation, the largest dealer group in the US, experienced their most profitable quarter ever in Q3 as a stronger than expected recovery in demand and tight inventories helped drive more profit per vehicle. Lithia Motors posted a record high profit in Q3, driven largely by used vehicle sales and its service body and parts business. As the other public dealer groups report over the next 2 weeks, expect similar strong results. Having said that, keep an eye on analyst questions during the earnings calls to see if they reveal any softness going into Q4. The wholesale auctions are indicating that consumer demand might be starting to weaken. Black Book reports that wholesale auction prices continued their decline last week for the 6th week in a row. Big news this week in the DMS space. Tekion Corporation, a cloud technology company and provider of a software-as-a-service DMS they call their automotive retail cloud, announced its Series C financing round of $150 million at over $1 billion valuation. The funding round was led by global private equity firm Advent International. Other investors in this latest round are Index Ventures, Exor, which is the holding company of Fiat Chrysler Automobiles and Ferrari, Airbus Ventures, and FM Capital. Tekion is a startup looking to disrupt the DMS market. From 2012 to 2016, founder Jay Vijayan designed and built Tesla's digital and information systems and software platform during that company's hyper-growth phase, as revenues grew from nearly nothing to more than $5 billion. From 2016 to early 2019, wanting to stay off the radar of larger tech providers, Vijayan built Tekion in stealth mode. Even when the company unveiled itself in January 2019 with 2 investment-related press releases, Vijayan kept the startup's true intentions vague, talking only about its digital service experience platform. Tekion continued to keep a low profile during the NADA convention in San Francisco in January 2019, inviting a limited number of dealers to view the product. Later in 2019, Tekion unveiled its vision of what an automotive retail DMS should look like with its automotive retail cloud. An investment and certification from General Motors that was announced in February of this year revealed Tekion has big ambitions in the DMS space that has long been dominated by CDK Global and Reynolds & Reynolds. Tekion already is knocking down one large hurdle, that being OEM certification and integration. With 17 OEM integrations already completed, the company says it expects to have the others done by early 2021. Tekion hopes to solve the issue of technology fragmentation that has plagued our industry for decades. With its modern cloud-based platform, complete with a centralized accounting system built on a secure data platform, Tekion says dealers can access the company's data from anywhere, while also providing seamless access to vendors via its set of APIs. Tekion will definitely be a company to watch as it attacks the 2 largest software providers in the DMS space. The wholesale auction space continues to be hot. ACV Auctions announced late last week that they raised an additional $55 million in equity, led by Durable Capital Partners. ACV also took on a $50 million bank line of credit. In previous funding rounds, ACV had raised $295.5 million from investors such as Bessemer Venture Partners, Bain Capital Ventures, and Tribeca Venture Partners. ACV has 1,400 full-time employees, up from just 400 in October of 2018. Rumor is that ACV will IPO in early 2021 and may be looking at an acquisition prior to becoming a public company. Between ACV preparing to become public and Car Global's acquisition of Backlot Cars last month, wholesale auctions has been a segment to watch. And speaking of the wholesale auction space, we're seeing a blurring of lines between retail and wholesale, and I expect this trend to continue. In this case, BCA Marketplace, the largest physical auction company in Europe, has launched Cinch, an online marketplace for consumers. BCA already owns We Buy Any Car that acquires vehicles directly from consumers. BCA Marketplace was a public company until it was bought by private equity giant TDR Capital for 1.9 billion British pounds in September of last year. It's interesting to see a wholesale auction company that also buys vehicles directly from consumers and now offers vehicles to consumers to purchase. We'll be keeping a watchful eye on how dealers specifically react to this as it plays out in the UK. In the US market, dealers might push back on such a move. Here in the US, the largest retailer of used vehicles, CarMax, runs the third largest auction company in the country with over 70 locations. CarMax sells over 400,000 wholesale vehicles per year. And remember that CarMax made a $50 million investment in online shopping site Edmunds early this year, which raised a lot of eyebrows. Carvana recently launched their wholesale channel Carvana Access, powered by Manheim's OVE product. Like CarMax, Carvana needs an efficient way to dispose of trade-ins and aged inventory that they don't need. It will be interesting to see if publicly listed ACV Auctions, who has a lot of momentum due to a strong revenue growth, will look to establish any partnerships with one or more consumer-facing marketplaces or dealer groups. M&A activity in the F&I space continues. We've seen 4 acquisitions so far this year from National Auto Care. NAC, which has provided F&I products, administration, consulting services, training, and marketing support to independent agents, insurance companies, financial institutions, and third-party administrators, and credit unions for more than 35 years, announced this week that it has acquired Caffeine Management Company, an independent automotive F&I agency based in Texas. Just last week, NAC announced the acquisition of Assurance Marketing, an independent automotive F&I agency based in Oklahoma that has provided product, services, and training to dealers for 30 years. In addition, NAC acquired both Excel Auto Partners out of North Carolina in August and Chicago-based Diversified Management Group in July. Clearly, National Auto Care is on an M&A buying spree and is one for us to continue to watch. We continue to monitor a watch list of interesting companies in the automotive technology space that we recommend that you keep an eye on. If you read my newsletter, I highlight a few automotive technology companies to watch each month, and we'll take the opportunity to highlight a few of these companies each week right here on the Friday Five. Today, we'll look at 3 interesting automotive technology companies: Data Clover, Parts Edge, and Insignia Group. First up is Data Clover, a software company founded in 2014 and based in Atlanta, Georgia. Data Clover develops technology solutions that convert dealership service website traffic into service business. The rapidly changing automotive retail environment is requiring today's dealership service operations to deliver digital-first customer experiences. Data Clover helps dealers create simple and fast digital experiences that acquire and retain more service customers. Data Clover is on the Inc. 5000's 2020 list of America's fastest growing companies. The second company we're showcasing this week is Parts Edge, founded in 1992 and based in San Diego, California. Parts Edge increases DMS utilization, improves efficiency, accuracy, and profitability with solid and consistent plans for eliminating all types of waste in a dealer's part operations. You can kind of think of it as vAuto for a dealer's part operations. Parts Edge also works with large dealer groups to create a simple way to roll out centralized, company-wide parts operation best practices while maintaining the individuality of multiple franchises in multiple locations. Finally, this week we showcase Insignia Group, founded in 2001 and located in Rock Hill, South Carolina. The Insignia Accessory System is a dealer's complete accessory sales solution to increase dealership profits on every new and service vehicle. Insignia simplifies the accessory sales process so dealers can fulfill orders quickly and easily, eliminating wasted time and minimizing confusion every day and on every deal. From affordable pricing and accurate, high-quality data to useful sales tools, services, training, and support, Insignia Group specializes in providing simple accessory sales solutions and training. By using Insignia, dealerships can easily manage accessory sales in their dealership. So that's your weekly Friday Five, a quick wrap-up of the big deals in the automotive technology over the past week. It's an exciting time to be in the automotive space. I'll keep my fingers on the pulse of deals being done, so tune in each week so I can share updates with you. Please feel free to contact me anytime, and I look forward to catching up to discuss the industry. Thanks for tuning in to CBT News for this week's Friday Five, and we'll see you next week.
Thanks for joining us for another edition of the Friday Five with your host, Steve Greenfield.